Bajaj Auto, the stocks at 52-week low corrected 15% in 2 days. And the concern, of course, is about sparking a price war with Hero MotoCorp. Rajiv Bajaj, MD of Bajaj Auto, is with us to clarify those comments. Rajiv, good morning. The market is worried that you're going hammer and tongs at the entry segment and you're going to sacrifice a lot of margin for that.
Right, and I must say I'm surprised. I don't know where it's coming from. And to begin with, I would say it was all there in our annual report over a month ago. And more specifically on Friday, I myself said at the AGM that we will go after the market with whatever it takes in terms of product, price, promotion, and people. This is exactly what I said. It's on the record. So, I don't know from where it has come down to one dimension of price. And perhaps, as they say, we don't see things as they are. We see these things as we are. So maybe that's how the market thinks. But it's not how Bajaj Auto thinks.
Okay. So just to reiterate, good morning, Rajiv. How does Bajaj Auto think? That you will go after market share, but not at the expense of margins? Is that how we should understand it?
I would say largely not, Lata. And let me start by saying that, what you do with the combination of product and price, not one or the other, is at the heart of strategy. Since March, we have had 6 interventions in the market which have helped us to improve our domestic volume and share, and I can share all of them with you, time permitting. But for now, let me start by saying that of those 6, 3 have been in the commuter space and 3 have been in the sports segment. And first and foremost, I make the point that year on year, our commuter growth is 38%, whereas our sports segment growth is 45%. So I hope the market understands that we've actually grown the more profitable end of our business more than we have the less profitable end of it. Yeah.
Sure. Rajiv, hi, good morning. I just wanted to pull out some comments from the call. In the call, you did mention that even if the CT100 volumes increase significantly from the present levels, it would still be margin negative for you, right?
I was not on that call, so I'm not aware of the call specifically. But if you like, I can share with you what we have done both on the commuter and sports segment.
Sure.
Yeah, please go ahead.
Let's start with the sports segment. Until March, we had just one SKU of the Pulsar 150, which forms the bulk of our sales in that segment. This clocked a sale of about 28,000 a month at a price point of 77,000. The first initiative we put in place, Sonia, was to reprice this down at 74,000, and we did this in response to HMSI's Unicorn, which is actually priced at 71,000. The result has been that the volume has remained the same. We are still selling the same 28,000 at the price point of 74,000. Now, there is no doubt that when you price down by 3,000, you lose about 2,000 rupees worth of EBITDA. But I want to tell you how that is more than compensated, because the overall volume of the Pulsar 150 has gone up from 28,000 to 50,000. Because we have had a second initiative in place, a new SKU called the Pulsar 150 Twin Disc, which is now clocking for the last 2 months 18,000 a month, which is 100% increment. And this is priced at a higher price actually of 78,500, which is actually higher than that of even the TVS Apache at 78,000, which was the highest priced 150 in that segment over there. So if you can quickly do the math, what it tells you is we may have lost 2,000 rupees of EBITDA per Pulsar 150, but we have gained the full EBITDA on another 18,000 numbers of the 150 Twin Disc. The third initiative we've had in place is that of a SKU called the Pulsar 150 Classic, which we've introduced at a slightly lower price than the Unicorn at 68,000. Undoubtedly, there is a further sacrifice of EBITDA there, but at a 5% lower price, I don't think this qualifies as being called a price war. In fact, a corporate edition like that is not uncommon for any brand. So the overall story of the sports segment, if I can just finish that, is the Pulsar EBITDA percentage slightly lower? Yes. Is the volume up? Yes, by 70%. Is share up? Yes. Is revenue up? Yes. Is absolute EBITDA up? Yes. And I would like to believe the image is up, because we have 18,000 of the new Pulsar sitting on top.
But what about market share? Why are you confident that this time the price cuts will work? Because, you know, last time around it didn't. I mean, in the month of March, you cut prices of the CT100. But despite that, your peers like Hero MotoCorp, etc. have continued to report 24-25% year-on-year growth in Q1, that is. So how are you confident that this time around the price cuts would work? Because, you know, the strategy of the company for many years has been to hold on to 20% margins. And now the strategy is being changed. So that is a bit of a concern that shareholders have.
Okay, then there's three questions. A, we are not changing strategy for the company. As far as the sports segment in the domestic market is concerned, as far as three-wheelers are concerned, exports are concerned, spare parts are concerned, that will remain in the 20% plus zone. Where we are going more aggressively after the market is only in the commuter space. That is one. Second, you said, what about market share? Market share has gone up. It's a fact. We have increased market share by 250 or 300 basis points. So while others have grown, as I just explained a little earlier, we have grown at 45 and 38%, far higher with the market. Let me now come to the commuter space, where there seems to be the greater concern. Now, in the commuter space also, as with the sports segment, we've had three initiatives in place since March. The first is our brand called the Platina, which is clocking 35,000 units a month on an average at exactly the same price of 47,000 as Hero's corresponding model, which is the HF ES. Recently, both Hero and us increased the price on this model, I believe around 1st of July. There is no price discount on this. In fact, there is a price increase. The second model is a CT ES, which is priced exactly at the same price as HF KS, which is a kickstart model. Now, it is true that when you sell a electric start model at the price of a kickstart model of the competition, you are absorbing perhaps around 1,000 rupees worth of cost. But whether this is called discounting or this is called differentiation in the world of marketing, I'm not sure. But I would only suggest that 1,000 rupees, again, does not a price war make. The real impetus to our volume at the lower end, at the higher end it has come from the new Pulsar, at the lower end it has come from a CT kickstart model at a price of 32,000 rupees. And I'm very surprised by the street's reaction to this, because this price has been in place for at least 12 months, maybe even 24 months. I don't know exactly how long. All we have done over here at this price point is to actually add 300 rupees worth of cost to invest in features that improve the style of this SKU. And as a result, the volumes of this SKU have shot up from about 5,000 a month to 50,000 a month. Now, this is proof that people don't react to price, they react to style, for example, or to features. Now, as a result, if the sales have moved up and taken even us by surprise, from 5 to 50,000 by addition of cost, we have already increased the price of this model on 1st July by 500 rupees. And we believe we have enough elbow room to increase price, because the next model is only at 40,000, as I explained.
Okay. So in the economy segment, what are you targeting in terms of market share? Because I think there was a bit of confusion on that as well. Currently, the economy segment market share, what does it stand at, and how do you hope to grow it over the next 1 year?
I don't know as of now what the share was last year, but I know that right now it's pretty much at a high of the last 12 months at least. It is up to about 34% for the first quarter. And we will certainly like to grow this further. And as I've explained, 2 of our 3 main brands there are priced on par with competition. There is only one that is priced below, and I'm sure that we have enough elasticity to move that price.
Okay, a philosophical question, Rajiv, that I have. Of course, you have made a decision that you have exited two-wheeler. I mean, I've asked you in the past, but is there any rethink on that? Because I've just started to see Yamaha, for example, making really good strides in that market, Fasino, for example, and that's a high margin product. So, is there any rethink on perhaps making an entry back into that? You still have a lot of goodwill about that segment?
You mean scooters?
Scooters, yes.
No, I have said this very often. Hero or TVS or Yamaha, who follow Honda into that segment, all miss out on very large chunks of the motorcycle segment, which are actually larger in terms of volume per month than the scooter segment. I mean, Yamaha misses out completely, for example, on as much as 700,000 motorcycles a month in pursuing 500,000 scooters a month. So, I don't see any company that can address all segments on it. But let me make a point on profitability if time permits. You see, there are 5 other factors which have hurt EBITDA, which I think perhaps have not been together given the importance vis-a-vis price. The first factor has been commodities. I think you will see the impact on that, on the results of competition as that rolls out from tomorrow. The second is marketing and sales cost. I think you should see evidence of that as well. The third is that although in the first quarter of this year, our three-wheelers grew by 80% year-on-year, it is still a lower mix for three-wheelers in the mix in this quarter than it was in Q4. That needs to be accounted for. Fourthly, our exports have really taken off, especially to Nigeria and in general to Africa. These are low EBITDA products, the Boxer and the three-wheeler that we sell over there. And finally, about 30% of our exports is hedged at 67 rupees to the dollar. So we have not realized 68.5 across the entire export revenue.
Okay.
These things need to be kept in mind, and not that we attribute the EBITDA being lower